So, Avi, welcome to the Attainment Podcast. Very timely and coincidental that you're here because this morning I did a post just explaining what the podcast is about. And I just explained the context that this podcast is obviously around growth in the business world, primarily through marketing, but not just about growth and marketing because growth, as you know, is driven by everything in a business. It's operations, it's management, it's leadership, venture capital, the tech, the software development, etc. So we want to take a holistic and integrated approach to growth, and that's why I thought we're very lucky to have you today because you cover that entire gamut fully, based on your experience and all the advising that you do nowadays. So great to have you.
Thank you for having me.
So you actually started off your own podcast recently, yeah?
Yeah, it's just it's going to be the voice of plug and play, and it's going to be called Startup Shtick, but it won't be launching for another few months.
Okay, all right. Well, hopefully this will be a good warm up because I think you're covering similar topics, yeah.
Yeah, it's all about the human element, the human experience.
So for this podcast, our audience is primarily marketers and founders and other business leaders and others in the business ecosystem. But primarily, marketers are our core audience. So I just started this off by letting everyone know you are actually an ex-marketer.
Yeah, started out in sales and marketing.
Can you tell us a little bit about that career journey? You mentioned earlier you made it to VP marketing, and I think then you moved up to Chief Strategy Officer role. How did you get to VP marketing? Any tips for some of the marketers listening?
I didn't take a traditional route though, but because I started off in business really young with my father. At like 5 years old, I was on the road with him, and I learned quite a bit by the time I was in high school. I'd already brought product lines to Canada and been at trade shows. Most people at the age of 14 aren't doing things like that. So I was lucky that I had you could say a mentor grooming me from a really young age. But as I always tell people, if you want to be in marketing, you have to go into sales. You have to understand what it is to be in the field. And I don't mean sales today, as I call them digital sales. I mean like analog, people sales, physical, any type of sales. Even if you're doing customer service at a restaurant and you're taking orders, or a cashier at a grocery store, there's a communication element that's common with sales. People are giving you flack. You got to deal with customers and so forth. But on the sales side, it's really important to understand what is it like to prospect. What is it like to get a no? All those things prepare you. And then when you get into the marketing side, which is the support, because without sales, there is no other department, right? So sales is the engine of the company, and marketing is supposed to support the sales department. So there's always this argument, which is more important, sales or marketing? The reality is sales is, because now this is an animal world, I'm saying. Today, you can deal without sales in the traditional form, just do it digitally, because you call it digital marketing out, right? And that's sales.
Yeah.
But fundamentally, if you're a company that's doing both, nowadays there's just about 50-50 in some cases. So, yeah, but my career didn't take like that. I started off as a partner in a consumer electronics and manufacturing importing company. And we were manufacturing in Latvia. We were doing consumer electronics in the audio world. And that's when I started off as VP Sales and Marketing, where I built a sales force around the globe. And the home theater in a box, I created that. Now we're profile speakers with multi-drivers and just all these innovative things I got to do at a young age, at 23 to 26. So that's how I started. But that's not your typical thing. Then I went on to other roles in other companies. But that was pretty good for 23 years old.
Why did you leave marketing?
I didn't actually leave marketing. Marketing's always still part of what I do. But over time, I realized my real expertise is in business strategy.
Okay.
And if you know actually what a strategist does, there's not a ton of people who are expert in strategy. People understand strategy, they can do strategy, but are you expert in strategy? And I realized my skills and my capabilities are really ridiculously strong in that area. And if you had to pick on one thing as to what you do best, the best foot forward, as a strategist.
Awesome. But I think you still work closely with companies and advising their sales and marketing teams.
Restructuring them, building them, creating, hiring, firing, training, absolutely. Marketing strategy, digital, analog, software, all that type of stuff. It's fully integrated.
What are some of the biggest structural issues in marketing and sales that you're seeing nowadays?
By structural, you mean?
Like, for example, alignment between the two used to be a big problem. I'm not sure if it is still a big problem in a lot of companies. What is the structural problem that you find yourself most often having to help fix at some of these companies?
Well, fundamentally, it all boils down to people. As I like to say, business really is not complicated. People make business complicated. So the more people you have in a business, the more room for complication there is, and that creates good or bad corporate culture and poor or good systems, et cetera, et cetera. So, throughout the years, from the, let's call it more the analog days to the digital, which we are today, the crossover of, do you have, the reporting line would be of the CEO, then you'd have, let's say, an operations person, let's say, and then you might have a chief marketing officer, you might have a chief revenue officer, and then after that you might have a VP of sales, and you might have VP marketing. And so it usually was typically split in two. And, both sides would argue, well, sales is more important, marketing is more important. Over the years, as we've become less and less reliant upon people to actually go and create sales opportunities, and the digital side is doing it automatically, you're relying more on software developers, social media, another skill, which is a different form of sales. If you think about it, it's creating sales in a different way. So you still need a sales mind. So that's why I say, if people are going to do social media and people are going to do digital marketing, they really should have an analog sales background. It would help them really understand that consumer behavior, the B2B consumer behavior, much better. So when they're putting programs into play and all types of buys, when they're doing a media buy from, it gets a better idea, clearer go-to-market strategy, if you will. But in terms of, what place, a lot of companies, it's a reporting structure. Who's responsible? The sales side or the marketing side? Depending on the size of the company, it's really much better to have one person handling sales and marketing. But when the company becomes too big, that's where the lines have to be divided, because you can't cover everything when a company becomes big. And that's where the corporate culture changes. If you have a corporate culture which, has a reward system that doesn't allow people to organically speak, they're blocked from their superiors, not good. But if you have a great environment where people in sales and marketing and other, customer journey and so forth are working together for the betterment of the customer and betterment of the company, then no one's scared to just say what needs to be done. And no one's worried about their job in a sense, which is somewhat utopic. But ultimately, if people were not to have to worry and do the best they can, then companies can be proactive, not reactive.
And I think one of the benefits of having a sales background as a marketing leader is also that connection and empathy for the sales team. For me, that helped me a lot work well with the sales team, because I was able to understand where they're coming from when faced with certain challenges.
Oh, absolutely. As a matter of fact, when you're working with a sales team, and we can call this, if you have a team that's digital, we'll call it, and they're the sales team, and they're using technology predominantly. The real customer internally should be your sales team, because if you treat them really well, you give them the product or service education they need. They know the story, they know the background of the company, their message is clear, they like what they're doing, anything they need, they get it on time, they're part of the process, and you treat them like a valuable customer, that transfers to the customer experience. So it goes all the way down. And I remember way back, one of my mentors said to me, he says, I don't care how much the sales reps make. Let them make more than I do, because if the sales reps are doing well, we're going to do well as a company. And that's the right point of view. I've seen situations where some sales reps are making more than the principals of the company, but they're killing it, right? So although they don't have the equity in the company, so long term they don't kill it the same way, but in terms of dollar sales and revenue, they're making more than those guys. But that's a good thing. You want to capture the attention and the challenge of a salesperson to always be stimulated. So absolutely.
Last time we talked, I did a LinkedIn post about when you mentioned, it was very insightful, that if you don't service your sales team, you're ultimately not servicing the customer.
That's right.
You're failing to service the customer.
Yeah. Yeah.
That I thought was a very profound insight, because as marketers, I had the advantage of having the sales background, but if I was a marketer who didn't have the sales background, I might have a little bit of tough time empathy with the sales team. But I find most marketers, they are good at empathizing with the customer. So for those marketers who don't feel that connected to sales, keeping in mind what you just said, they can think, well, if I want to keep that customer happy, I got to keep sales.
I mean, it's not as simple as that, but fundamentally, the fundamentals do boil down to that. And what I said, you just said, like the reverse end of it, that's the net result, and that's exactly true. But it's interesting, if you look at business schools, they're not teaching, most of the students are not learning it now. The executive MBA, they're going to teach you this type of stuff because it's assumed that you've had experience in life. It's different. But when you go straight into the MBA program, they're not teaching you how to manage a sales team, how to build a sales team. It's that whole human psychology element of it. They're not really teaching you that. But one thing I learned when I was in that consumer electronics company, and I was like 23 years old, and the youngest salespeople were twice my age. So here I am, this baby-faced, kid fundamentally to them. And I remember, one of the guys who handled, I think it was Harman Kardon or something, Infinity and some other high-end brands, they were big. And he calls up my partner and he says, Who's this kid? He says, Avi. He says, yeah. He says, don't worry about him. He's a rock star. You sure? He's got this baby face. Does he shave? Really like a baby face, I looked like I was 16 years old. I was 23. So I can't blame the guy. So I really, I learned that from a young age, at the end of the day, it's the old expression, you're good as your last sale. So I used to go on the road with these guys. And I'm used to going on the road since I'm 5 with my father. So I know what that's like. And I trained tons of salespeople. So I go with these guys and I train these guys and show them how to sell. And they didn't really get to sell well. But when I went on the road with them, the sales just flew because I understood that. And there's a certain thing with salespeople. Listening is so important. That empathy that you talked about, it's not just listening, I hear what you say. It's more, what is the body language saying? Where's the stress points? What are their concerns? Really, it's not just the old-fashioned, be the service provider, to the customer, solve their problems, and you're the best customer, you're the best salesperson. That's not the answer. It's more than that. It's building relationships. And one thing I learned with my father, didn't matter which company he went to, his customers followed him all the time because he serviced them to death. He was trustworthy. He was reliable. He was consistent. And they knew that if Norman was, taking care of them, wouldn't worry. And he had 2 assistants, I'll wait for Norman.
Wow, that's interesting.
Which created another question. Why are you hiring assistants if you don't talk to them? But that's another story. But yeah, it's all about relationships, right?
That's a very interesting example. Your father. Have you seen that? Have you seen that have you seen anyone else have that level of loyalty from their customers where they follow them? I haven't seen it. Although maybe a few times I've seen it where because the sales rep went to a competitor, they were able to influence their previous that customer from the previous company come over. But it's pretty rare.
So you find this typically more in very competitive environments. So he was in restaurant, hotel, supply products. Okay. Margins are slim. There's, you have Circa, you have Cisco, you had Gordon Food Services, you have all the other companies, Proscan and so forth. And you're working on low margins and it's high volume. So it's the same thing with consumer electronics. There's tons of suppliers out there. There's lots of competition. So if a sales rep goes to another company or takes on a new line, drops that line as an independent rep, back from them. And, like in Quebec, it was interesting. I remember the sales reps, they formed relationships. They formed bonds, really good bonds with their customers. And, I remember one client in particular wanted to get the Alpine radio line. This dates back, of course, obviously. And his sales rep had Sony. So he used to joke with his sales rep, can you get Alpine? So anyway, one day the Alpine guy came in and the sales guy from Sony that he's close with came in and they're talking. So anyway, long story short, the meeting happened with Alpine first and the Sony guys thinking, okay, well, I'm going to lose some of my business, some of my shelf space, right? Of course, nothing happened. So when he spoke to the buyer, he said, I thought you wanted Alpine. He says, yeah, I wanted you to have Alpine. Wow. I'm with you. I trust you. Sony's a great brand. Yes, Alpine draws, it's the crown dollar crown, but you handle my business. I rely on you.
Wow, that's incredible.
Yeah. That's incredible. People make the difference. Everything we do in sales and marketing is all about trust at the end of the day, whether it's digital marketing, even when people look someone up on LinkedIn for professional services, a very good example that if you're a consultant, they're going to look you up and they're going to say, does that person look the role? Does he look trustworthy? What is the background? What does the avatar look like? Does it say what this person does? What do their recommendations look like? They're looking for every reason to see if they can trust you. That's just stage 1. But even doctors, does he sound like a doctor I trust? A guy whose last name is whatever. That doesn't sound like a guy I trust to work on my, whatever. Everybody's looking for a reason to stay, or go.
It would be really great if more salespeople, that insight you just shared, I think is so valuable for salespeople, the enterprise B2B software salespeople, creating that level of loyalty. Because in the B2B software space, executives do change companies every now and then. And sometimes they might not go to a competitor. Often they might go to a different industry, a vertical, but I've rarely seen them able to bring in their previous customers with them. But it would be so great if salespeople started doing that, started focusing more on building relationships to the point that customers follow them wherever they go.
Well, you're right. Every industry is different. If you look at, enterprises and SaaS and so forth, it's a very good example. So there's a term called stickiness, right? How long are they going to stay a customer? What's the customer lifetime value? So if you look at something that's sort of like infrastructure, enterprise stuff, operating system stuff, they're not quick to change. It takes a long time to make a company want to switch because there's so many different layers of issues that have to happen. We haven't even talked about the training side of it, right? So they're not very quick. Now, if it's a newer category that's coming in, or the category is still not fully established, and there's not a clear market leader, it's sometimes easier because they're not really going to change so much for price as they are going to look for performance, reliability, and trust. So if there's customer service issues, the transition process, so software is a very unique thing. It doesn't work the same way.
Interesting. I see. Shifting gears to some of your other work, because you're also involved in the venture capital scene.
Yes.
So, we talked a little bit about some of the marketing, some of your marketing experience, and some of your insights in the sales and marketing world. But I want to also get into some of the stuff that you do in the investor relations world. Mm-hmm. Last time we talked, you shared some pretty good insights about being very careful the way you approach investor relations. We with the Toronto B2B marketing community, we had an event on how marketing plays a very key role in attracting venture capital. And interestingly, the VCs we had as speakers at that event, they all emphasized very strongly that marketing is actually a very key driver for us. We look at marketing very, very much more than a lot of marketers realize. But investor relations did come up, and we didn't really cover it. The topic of investor relations as to people in marketing roles. Some companies have their own investor relations team, but some companies put the onus of investor relations onto their marketing guy or girl. Last time we talked, you shared a kind of a framework with me, some like guardrails on how to approach it. So if you're a marketer at a growth stage company where they haven't yet hired an investor relations person, but they want you to do some investor relations, can you tell us a little bit about the framework and the guardrails that they should be following?
Yes. So we're talking about startup companies that aren't mature yet. Sure. So I mean, they're prior to this, there's some precursors that need to be in place. So your PR, your communications, that starts with your team. From the headshots they're using in LinkedIn, and LinkedIn is critical because as they're looking for, just one point here. When you look at an investor, specifically VCs and even angels who are used to this, they're not so saying to themselves, I got a pocket burning with millions or thousands of dollars. I got to spend, I got to invest, I got to go. No, they get tons of offers all the time. They got deal flow coming all the time. And as a result, their mindset is more skewed towards who can I take off my desk? In other words, who's not worthy? And they're looking for every flaw. Give me a reason that I can put that file in the garbage or put it aside. You know what I mean? That type of thing. So you've got to really dot your I's and cross your T's, right? You got to really, even right down to your spelling and your grammar and the documentation you use. They're going to look at that. They're going to look at, the fonts that you use. If it's inconsistent, the colors are too much and all over the place. Because it tells them that you're just all over the place. You're not thinking things through. It's not strategic. The flow is off. So they're looking for the little things, and those do count. So let's go back to the persona in the company. Let's assume we have a good team. Okay, let's assume the background is good. If they have a crappy LinkedIn profile, you're going to have a bit of a problem. Everybody's different. There's no one answer to this, but they're going to look for reasons to say, well, this person doesn't have any background in this. What are they doing in that? Some people put a LinkedIn profile specific to a certain, sort of a certain industry, a certain space where they want to be, whatever it is. And you see this quite often where someone's involved in a startup, but they can't say they're in a startup. Their current job situation, let's just say it's murky, whatever it is. So they don't want to put it on there. But their job description shows that they're in something very different from the startup they're in, even though they're fully qualified to be in that role. So how do you get that person to change their LinkedIn profile so it may not say ABC company that they're working in the startup, but it will at least say that they are, for example, a digital software specialist. Something, whatever it is, as opposed to what they're doing now, which is different. So they really have to go through their resume or their LinkedIn profile and make sure it makes sense, not just to the present state, right, the job they're in, but also when an investor, let's say, comes in and says, let me see who their team is. Let me see what moxie they have behind them, what schools they went to, do they have recommendations, do they have industry background, how long have they been in this? So your LinkedIn profile is huge. Your image, your avatar, everything you have there has to be really clean, really tight. That's step one. Then your website, assuming you have one, that has to be proper. But let's take those two things and put them aside as we'll do them as a foundational thing. As I said, the investors are generally not looking as to why I should invest. It's more so why not. And once you pass that certain hurdle where risk is away and confidence and trust in the individual and the business model, et cetera, are meeting their their personal and their professional as well as their investment thesis, requirements. Then it's more like, okay, let's filter out these guys based on who's the better of the lot, right? And it can come down to some gut things. It could come down to, oh, these guys are all Ivy League, probability's higher. It could be a variety of things. Everybody's got a different style to it. So at the end of the day, what the individual said to you, yeah, marketing makes a huge difference. There was a client I was working with, I forget which country she was from, and she had this new testing technology, software testing technology that was great for chemistry. In chemistry, you can test in advance, from pharmaceutical drugs to, let's say just chemicals that you use in the lab or chemicals for the oil industry. And it would save major amount of time, as a result, major amount of money, and bring your product to market faster. So she was smart. She came out of the university. She leveraged her university. She got great publicity, and she put that on everything she had. And she was very smart. She got interviews with, I think it was National Public Radio in the US, which is like our CBC, and other articles, New York Times and stuff. So she gathered all this, momentum. So she could have been a horrible, leader, CEO, founder. The product could have been poor, but you see that whole page in their deck, in their business plan, that shows massive credibility. That has a lot of weight to it. It doesn't excuse the other stuff, but it does offset a little bit. Those little things count. The other little things are, and a lot of people don't realize this, let's say you have a strategic partnership with an organization, even if it's not revenue generating, you're not making money from it, but the name carries weight, right? It creates credibility, creates trust and confidence, right? You don't think to mention it. Well, absolutely mention it. As a matter of fact, put a press release out there, right? So all these things matter because you got to put your best foot, forward, because they're looking to reduce risk. All that press coverage is a way for them to say, that's a little less risky. They're getting their name out there. These guys are hustling. And don't forget, a lot of founders, especially if they're tech-oriented, I don't want to use the cliche of nerd or geek in this and that, but they tend not to be pro-sales in terms of comfortable selling. And unfortunately, they're the ones that are best to sell because they know the technology intimately. So if they see a founder who should be great at selling their own technology, so you want to be able to show that you walked it, you've ran it, you've done everything you had to do to push the best you can. Even though I'm not a salesperson, I'm not a marketing person, I'm a tech guy, I'm a tech person, whatever it is, but they did all the other stuff. That impresses the hell out of these guys because they know that's contrary to your personality. And if you come across as shy, but you know how to push yourself when you've got it, you can smile, you can schmooze, you can do all that stuff. Good, you're going to go out there, you're going to go the length, you're going to go through it, you're going to sell. So you've got to do that. And a lot of startups, as soon as they get, $1 million, 2, 5, depending what industry, they always try to find salespeople. And they burn through a lot of money in sales because a lot of the problem is they don't know that they haven't got their go-to-market strategy properly because they don't understand who their real customer is. So as a result, it's really a waste of time. What they should be doing is going into the trenches and selling themselves, getting that data, learning to make sure that it is the right proof of concept, that the user base is the right user base. It happens all the time. There's a client that had in cybersecurity, or what we thought was cybersecurity. She went through 6 renditions of what the technology is. And only this week that she had to work with her for 2 years did she realize it's not that, it's this, and now she's getting traction. So she didn't do proper due diligence on the customer user profile. So now her new go-to-market strategy is perfect now, but she still has to sell. So investors want to see all that PR stuff first, and then when you're looking at getting investors, there's a whole art to getting investors and different sources and so forth. But let's talk about the point that we talked about. It's really sensitive, and that is securities commission stuff, right? The legal stuff. One of the things I try to speak to CEOs about at various levels, because a lot of them aren't aware of this, is that certain people can and cannot legally talk about raising funds. And you can get into some serious trouble raising funds, especially if you don't have certain, brokerage licenses and so forth. There are, I don't know all the rules officially accounted in the US. Before you raise funds, make sure you're speaking with a lawyer that understands securities law. Make sure you understand the do's and don'ts of that. And that shifts now to who do you want handling your PR? Who do you want handling your communications and your marketing? Someone who understands it or someone who doesn't? They're at risk for saying something wrong. The CEO will be accountable for it. So I'll give you a simple little example. If I came to you and said, David, I'm working with this company. They're really fantastic. Yeah. They're looking to do a raise. They're going to go public in about 5 months. Really? Yeah. Oh, yeah. How much are they going to go to? Well, you're going to come in at 5 cents, and they're going to launch at $1. That whole thing I just said, illegal, unkosher.
Sorry.
Sorry, can't do that. I cannot do that. The other thing you have is also the issue of, like in the US, they have something called Reg D. There's also the issue of sophisticated investor. There's all these different things, and there's different platforms that are on the market that you can use as well. But you got to really be careful how you do this. So my advice is, and this of course depends on what funds you have available to you. First of all, even before you do this, I always say to startup guys, try to get yourself a lawyer and accountant to be part of your team. Why? Because they basically protect your behind. So with a lawyer, when it comes to raising funds, that's where a lot of companies make very big boo-boos. And there's a lawyer I work with in Toronto who's really fantastic at this, and he's really specialized in startups. And he was telling me a story about somebody that raised funds. They didn't do certain things properly, and they didn't register the raise and so forth that you have to do state by state because they're raised in the US. Anyway, there was a disgruntled investor down the road. And they knew that they skipped some steps, not intentionally to hurt anybody, just that they skipped. So they filed a complaint to the Securities Commission. And as a result, the net result, after all this stuff, is they had to return all that money. And they got penalized for it. It's really important that you go through the proper steps. Do not take any shortcuts. Lack of knowledge of the law, zero excuse. You will still get nailed. So, everything you do, a lawyer should be there to help you. Give a nice little piece of the company. Don't be cheap. And he'll partake with you all along the way. So compensation plans and employee agreements, and that's really critical too, because startups in the early stage, they tend to, have tons of people saying to them, oh yeah, I'll do this for you. I want, chunk of your company. Everybody wants a chunk of the company, right? Before, the founder has nothing because he's given it to everybody else, which at the end of the day, most of them don't do anything for that matter, because they all say they'll do it, they don't. So if you have a good lawyer that's watching over things, they're going to look at it from a different angle. Obviously, it's out of the box. It's not begging for money and begging for resources from your human side to help you advance your company. And they're going to say, hey, why don't we do something different? Why don't we do performance-based? Very classic. Let's tell them, if you achieve this, we'll give you this over time. You know what I mean? Things like that. And there was a company in the Middle East I was dealing with, and very classic story. He was working with some group from India and promised him the moon in the sky, and he was very quick, and he gave him a percentage of the company. For it was not the point. And then that guy was causing all types of problems and difficulties for his company, and put him in a standstill. He couldn't move the company forward. Forget about how he dealt with it. At the end of the day, you got to get lawyers involved to eject him. But it's so easy to make simple mistakes. And startups, as I say, they make the best of the worst decisions, or at least they try to, but often they don't, and they do things that can hurt them later on. So having an accountant and a lawyer early on, really important. And the second piece to that is when you go to a VC and they see that you have on your board a lawyer, an accountant, and you say to them, we're not paying them, they're on our board or they're an advisor, but down the road he'll switch to become our CFO. Oh, good. So you have a CFO already lined up? Oh, yeah. Everything we're doing is by the book. There's no gray areas of gap here. Right? This is done properly. Straight up. Oh, you have a lawyer too? Yeah. Oh, yeah. We make sure our raise is done. Our offering documents are there. Everything's capped. Everything's done perfectly. It's impressive. I don't take any chances. That tells the investors that you guys are very strategic. You're thinking things through. You're making sure you're protecting, the investors. All these pieces together. So when it comes to the human side, if you can afford to have somebody who's educated in the securities law, all the better. There's a classic thing where people say, hey, I know this guy, he knows how to raise money. That's not kosher. In most cases, most of these people do not have the securities certification to do this. And they'll say, no, it's okay, we'll have an agreement that says you'll give you shares in this. All that stuff's not legal. When push comes to shove. There are many people that are raising funds or claim to raise funds. You can't do that. Wow. So it's very interesting how that works. But if you partner or work with individuals who have these certifications, and you say to this person, yeah, I used to work for, Nesbitt or RBC, whatever it is, I have this and that. Yeah, that person can. A lawyer can, I believe, as well. I think an accountant might be able to do so as well. Knowledge is power, or dangerous, if lack of. So don't just run out and raise funds, and therefore don't have somebody that's a marketing person suddenly be responsible for the marketing communications of your fundraising.
Interesting. So is this at all stages, or is this starting at Series A stage, or would you recommend this from the get-go, like the seed stage?
From the moment you are thinking of taking your company to the point where you're going to start raising funds,
Okay.
speak to a lawyer. and speak to an accountant or a CFO. Usually they're accountants, but CFO. They will explain to you share structures, and they'll explain to you about voting rights, and they'll explain. I mean, there's too much to list on the show, but they'll make you understand now. If you're a person who understands that already, that's a different story. That being said, you might have a little knowledge, and I would still double check with a lawyer and accountant. Have a second opinion. Doesn't hurt, right? To assume is to err. So double check.
Yeah, like for myself, I actually, as part of my MBA, I did a course in business law. What you just mentioned, I had no idea.
It's out of scope, that's why. Yeah. They're not teaching you securities. They'll teach you in finance, they'll teach you the securities, what type of securities there are, but they're not teaching you this type of security, right? Equity and company. And, there's other things, like how to take money in, how to deal with the US if you're, or Canada, things like, should we have a company in the US that's operating in and a holding company in Canada, for example? All these different things, what are called corporate structuring. You want that stuff in place in the right time, but you also want to have a strategy of how you're going to get there. Yeah, there's a whole lot of this that lawyers can save you a lot of time, and that's why also good advisors, good consultants, and so forth. I like to include myself in that. We know more than enough to be dangerous to make sure to protect you, but also know what to say. Okay, I'm going to tell you this. Don't do this. You want to know more of this? Contact the lawyer. Speak to the lawyer about this. Now, if you look at many incubators and accelerators and so forth, they tend to have legal and financial advisors there just for that reason. If you're part of any of these types of organizations, look into it. If they don't have one, and some don't, and some government ones, for example, don't, ask for someone's referral to a lawyer they know, a family friend. The best thing is to get somebody that you know, obviously, because you can trust them a little more. They're not going to dink you for every hour or minute, for that matter. Yeah, professional help is really important.
And like you mentioned, it's such a strong indicator of confidence for investors having that person as part of your team. It's like, they've done their due diligence, they're doing everything by the book, their books are clean, everything's tidy.
It's organized.
Numbers are tidy, numbers are organized.
Yeah.
We can work with these guys. And the fact that this accountant or lawyer is willing to work with this company, because lawyers and accountants are they're very critical. So they would have already done they would have had a high standard before working with that company on a sweat equity basis.
Yeah, you're talking about risk. The due diligence, if they're going to give up time,
Exactly.
Which is their money, because they only deal with time, right?
Yeah.
Yeah, they're not going to, they don't have a high tolerance for risk. So they're going to do due diligence. They're going to figure out how much time they can afford to lose or risk, essentially, which is what it comes down to. And then they'll tell you that I can afford to risk up to so many hours. But yeah, that's right. It's a big critical factor, especially if you get a lawyer. I mean, it's great if you get a lawyer who's an independent practitioner. That's great. Okay. If that lawyer came from a great firm and went on his own, even better. If that lawyer is currently working for a great firm, that's even better. Right? There's degrees, right? That lawyer's got a Harvard degree, that's even better. You know what I'm saying? Like, they look at these things. It's like, what sets you apart from the next one? Well, they're all Harvard graduates. They could still be assholes, but they're Harvard graduates, probabilities they'll be more successful. I don't necessarily like to say that, but that is statistically more so the case.
If you are in that situation where you have a lawyer or a CFO join you on a sweat equity basis early on, how much equity would you give that role? Because I have a good idea of how much you would give to a co-founder and a CMO and a head of product. How much would you give to?
So first of all, it depends on what stage of the company you're in. Let's take, for example, to software, because software is much more relatable these days, and most of the audience probably knows how a software company works, and we'll think of a SaaS software company to make it specific. If you've got an idea, it's very unlikely you're going to get any professional to say, yeah, I'm in. They'll be more like, yeah, sounds good. Let me know when you've got things more advanced. What is more advanced? Any professional give you what their version is. Let's say you found a co-founder, and that co-founder is also, let's say, a programmer, and together you've created close to an MVP, minimum viable product. You haven't tested it, you haven't third-partied it, you haven't done anything yet. It's just like a sort of a minimum of a minimum. You might have a little chance of getting one more interested. But until you have some sort of structure that you're ready to start moving on, that's when they're going to start to look at you. So if you have somebody that says, I got minimum viable product, I've done my due diligence, here's my target audience, here's my, you have a business plan, you have something to really show them, some documentation that's logical. You've got a bit of a team already. If you have some test pilots out, even more probable that they'll be interested. And at that point, that's the typical stage that you can start really getting one of these professionals interested. Assume you don't know them, they're not a friend of the family or family, right? Stranger type of thing. So that depends. And as I always say, startup founders are always making the best of the worst decisions, especially early on, because they're short on finances and they're short on talent, right? And it's not easy to get people to work for you for free. And I say free because shares that aren't tradable, that aren't liquid, is free, right? There's a lot of risk there. So everything's risk. So if you have the ability to create, let's say a basic incorporated company, and before you do that basic registration, I would go and pay for an accountant, go and pay for a lawyer, and speak to them what's the best way, pay that price. So you at least have the ball rolling. And then when you go to that professional and say, okay, I've already got this corporate structure set up. Here's the plan. Here's what we're going to do. That's what I think, but what do you think, essentially? Here's all the rest of the technology. Here's the patents we're capable of achieving. Can you do patents too, or do you know a patent lawyer, Mr. Lawyer? Maybe, right? So, the US, the accountant might say something like, or CFO might say, yeah, are you used to doing international business? Do you know how to do taxes in different countries? Do you know corporate structures, in the US? Do you know, Las Vegas, that a company versus, that if you need that, you're going to find that out very quickly. So most companies that are SaaS are capable of doing that. In the last company that I was CEO for, I was looking for a CFO that could do all that type of stuff because we're going to go global. It's not even a question about it. And the lawyer, I needed to make sure we understood all those things that we're doing, where we're taking money from, how we're going from one country to the next. But we were at that stage where we had test pilots out. We had major organizations testing it and proving it solid. The software was almost finished. Wouldn't have taken much to finish it. So they were in. They were believers. That's really what it came down to. So how much is the question? Right. So if you look it up online, whether you're using AR or not, you're going to have all these different minimum or range of what is suggested or what's typical. That's just not your individual circumstance. Let's say, for example, it says online, you should give no more than 0.25%. Okay. But if some guy is a super duper uber high level, amazing lawyer, and having him on your team, let's say, as an advisor, is going to elevate you, because when you go to do a presentation, they're going to look at your advisory board and they're going to say, oh, you got the former CEO from GE. Wow, you got the compliance guy from Bank of Montreal. Oh, these people raise your credibility, which reduce risk. So it's almost worth it to give them more, because it's going to be offset to some degree by getting money, let's say, quicker and easier. And they're like a testament to the fact that I believe in it, just like you said earlier. Lawyers, they don't take on risk easily, right? They're risk averse. So it speaks a lot. So in the last company, we gave 3% with a bonus of up to 4%. And the company was going to do quarterly dividends, so he would have been able to partake in that. Now, I'm giving you the net result. That's not the details of how it was structured and so forth, but it was also an earn-out over time. There were cliffs and other things in terms there as well, but that's essentially what he was able to achieve. The CFO, we gave the same thing.
Wow, and it's interesting adding these people to your team and rewarding them properly. Seems like in the end you'll make more money because there'll be an ask for you. They'll elevate the value of your company and how much people are willing to put into it.
Well, they do a lot of things, right? It's like I said, people make or break a company. It's all about people, right? So from their names to their pedigree to everything they've done, that matters, right? But also, how they communicate. If you get someone who's got all that great stuff, but they're an asshole, no, not at any price, not even for free, they can damage the company. All things have to be equal. They have to, share your personal values, your corporate culture, and so forth. And it can't be contrary to that, right? Yeah, you can have a great CFO there, and even if he's, advisor will come when you do a pitch, and you introduce him. Here's our soon-to-be whatever CFO, let's say, and he speaks to the numbers like that brilliantly. You look great. The company looks great.
Yeah.
Have you guys looked at your patents? And they say, yeah, we have a lawyer. He's set that all up. When we have the funds in, we're going to go for the process. Fantastic. Oh, that's great. Once you say the lawyer's done that, they're not going to question you. Unless it's a bad lawyer.
Yeah.
Then it's not good to have a lawyer.
Absolutely. And earlier you mentioned, you kind of gave a caveat, a note of caution for marketers who are asked to help with the investor attraction.
Mm-hmm.
What are some do's and don't do's on that front?
Well, be careful what you say. That's the first thing. And whether that's verbal or print, you've got to really know. So if there's a situation where a company is saying, okay, our marketing person's going to do it. If I were leading that company, I'd be telling the person to actually, I'd probably be investigating myself of what he needs or she needs or the person needs to do in order to be proficient and intelligent, to understand the framework or the guardrails of the do's and don'ts. What you can say, to whom you can say it to, how you can say it, where you can say it, all those types of things. I wouldn't have someone go and say, you got to get, this stuff going. Come on, we need the money. No, haste makes waste. You're just going to waste a lot of time. You're going to burn things. Take your time, do it properly. So that being said, is it wrong to, let's say, speak to a lawyer? No, spend some money. If you've got some money, it's worthwhile. Protect your behind. Speak to a lawyer and say, hey, listen, we're thinking of doing a fund. What can we do? What should we not do? Who should we speak to? Who should we not speak to? They can give you great advice. Also, a good accounting firm can help you with that, especially if they work with startups. There are some agencies that do specialize in this. It's not a bad idea to interview these agencies, whether you end up using them or not, or later on, that's another story. But the due diligence side of investigating this subject matter through the agencies that are proficient or supposed to be proficient professionals in this space, you're going to learn a lot of information. So combined, you can decide what your strategy is for. But if you have somebody in-house that's doing it, that's not from, the financial space, I would definitely make sure that they have some education. And if you have to pay for it, pay for it.
Also, marketer asked to do some of that work. I think it would be a huge relief if we had that in-house lawyer.
For sure.
Otherwise, you'd be a little bit nervous.
Well, absolutely. But the problem is, though, most of the people don't know about this. So you take a typical marketing person. When I say typical marketing person, let's say marketing manager and above. Let's say a social media manager and above. So it's low mid to mid low type of thing. They're generally not going to know this stuff. Yeah. And all they're going to do is think, typical marketing stuff. Okay, how do I do this? Or where should I go? Oh, who's talking about, that type of stuff. Part of it. But at the end of the year, execution could cause problems, and they can be in trouble on top of that, which is very bad. But it's like you said, they don't teach that in business school. I don't even know if they teach that in the incubators. I haven't heard any of them teach people about that actually, but they should.
Yeah, actually, there's a lot they don't teach in business school. For example, you could be in marketing. They don't teach that in business school. There's like 20 different marketing courses. That one just focused on B2B. But that one focused on B2B. No, I haven't seen it. Oh, you have?
Yeah.
Oh, okay. Which
At Queens.
At Queens. Okay. Well, that's why Queens is one of the top MBA schools. Also last time we talked, you do a lot of work with in the US.
Yeah, globally. Yeah, less so in Canada.
Less so in Canada. Of course. But right now in Canada we're approaching the elections. I think last time we talked, you mentioned to me, and I think this is well known that in Canada, everyone's a little bit more risk averse, more conservative.
Definitely.
Companies are more risk averse. Investors are more risk averse. People don't want to invest as much. A company might not want to go and hire that lawyer. Whereas in the US, you mentioned to me that they're much better at just going for it and investing their money in resources like a lawyer or an accountant. And then investors aren't as risk averse. Right now, what I've noticed is the political parties in Canada, they're kind of competing on a few economic factors, like tax cuts. They're all competing as to who could offer up the juiciest, most attractive tax cut. And also another one is real estate and housing. They're kind of competing as to who's going to have the best housing policy. If we have that, I don't know, Pierre Poilievre and Mark Carney listening, what would you recommend they do to get Canada's business ecosystem and growth ecosystem a little bit closer to the US as a whole?
Well, first, I don't usually get into politics, but I would first tell them, by the way, I'm not liberal or Democratic or Republican or blue or whatever it is.
Yep.
I'm more policy driven.
Yep, just policy.
Right? But, I wrote this article a little while ago on Medium that basically was talking about Canada. If Canada were a company, basic business common sense would say, don't put all your eggs in one basket, which would mean fundamentally you don't put a large portion or percentage of your revenue into a customer. So what Canada has done over the years has put a huge portion of their energy into one customer. And their whole economy is like that. As a matter of fact, even the mentalities. An entrepreneur I've met that would be doing importing and manufacturing and would export stuff, they'd say, if we can get 1% of the US, I could retire. One product alone in Walmart, I could retire. That's not a mentality of international business. That's like dealing with your neighbor. It's like selling to your family almost, right? So the mentality has to change. So when I was writing this article, I did a little bit of research and found out that in Japan, we are the 4th largest supplier of lumber. I was saying to myself, why only 4th? What are we missing? We're one of the largest lumber producers in the world. Why haven't we pushed to do more? And I looked at the trading agreements with Europe, and we have an amazing trading agreement with Europe where there's just about, close to nothing, like just negligible amount of tariffs. It's like nothing there. They're the perfect trading partners. So I'm not exactly, thrilled with what's going on with all this tariff shit that's going on. it's quite disruptive. But if it's going to happen, I'm going to look at what's the positive side. What can we learn from it? How can we move forward and make the best of it? And given that I said too many eggs in a basket, I say, well, you know what? You know what Trump has done? He's woken up Canadians and hopefully politicians there. And I said, you can't rely on us anymore. Well, good for you, Canada. Good for you. Wake up, man. And the answer is the government has to invest hugely on programs to promote international business. There's tons of countries. I mean, we are like, with our exchange rate now, we're like the China of the North with our exchange rate. You know what I mean? Like it's so cheap for Europeans to be buying from Canada. So and I'm not going to talk about how this would impact the U.S. because that's not my priority because I got a whole thesis on that. But in terms of from a Canadian perspective, yes, it's probably going to be painful. We have no choice to see what's happening. But let's insulate ourselves better. Let's diversify. Let's spend a lot of money on helping businesses export, helping businesses communicate and market internationally. Let's get great trade agreements. Let's get better than what we have today. Let's get relationships going. Let's get ambassadors, whatever it needs to facilitate Canada selling a huge amount of stuff, even more than we sold to the Let's do more than we did as a matter of fact. Let's not rely on them at all. And if we have any excess inventory or overflow, yeah, you can get it at a premium price, whatever. But let's not rely on them anymore. We're an amazing country. We've got a great reputation. We're like the Swiss of the North, they call us. And we make good stuff. We're proud about what we do. So yeah, I mean, let's use this as an opportunity to make, I hate to say it like this, to make Canada great or make it better than it is this time. And I think on the second point, North Americans have, and the Western world as well, has gone for the low cost, and I'm thinking like Walmart there, the low cost, to bring the lowest price. But, there's no one right or wrong angle in a sense, because if you do that, yes, prices are lower, and then, lower class people or lower social income class can buy these things, but at the same time, these same people may not have jobs because of these things, right? So to me, it just seems more logical to have, if you can't make stuff here, you don't have the natural resources, let's say, to make it in the sense, okay, import those, makes sense. But if you have the ability to do it here, well, then do it here, even if it costs a little more, because at least people are working. From an environmental perspective, there's less, carbon footprint being impacted by not bringing it in. So we used to have North America used to have a great consumer electronics manufacturing industry. They used to have a great automotive industry. They had a great clothing industry. They had a great materials and stuff. And most of that went, China, for the most part. I mean, China's the manufacturer of the world. I think COVID woke people up and realized, hey, almost everything we have is made there. Hey, critical thing, masks. We can't get enough. Oh, guess what? They're made in China. Everything comes 6 weeks on a boat. It's crazy. Bring manufacturing back. So it also baffles my mind. We have tremendous oil production. We're selling the raw good to the U.S. They refine it and they sell it back to us. And it costs us even more. Why? Paper products. We give it to them, they process, and then we then sell the tissues here. Why? This makes no sense. So the companies that are doing this stuff here, go to them. Tell them, hey guys, listen, we need to start processing here. Let's form some partnerships. Let's process it here. What are we giving to the U.S. for? Aside from it being bad for the environment, we lose control. So I think the Canadian government should be saying, what things will we not allow to be controlled in terms of our destiny? Energy should be one of them. We're great on electricity. We have a decent amount of that, but let's do that with natural gas, with oil. Let's do the whole thing. Even if it costs a little bit more, we control it. And that's the important thing. We need to have more control of things. And I think it'd be, it's beneficial to the environment at the same time in the long run. I may be wrong, but I think it would be in some cases because there's less shipping and movement of goods. That's what I would tell them from just a couple of things.
I think the advice you just gave, that sounded like you advising a company.
You see it like that. I see him as the CEO, I see Ken as the company. Exactly.
I think we need more of that, because I think if we applied some of these principles and ways of thinking from the business world, especially from someone like you who has this very broad, diverse background, I think Canada could become an absolute economic powerhouse with what we have, with the resources we have, the talent that we have.
And the reputation. Canada's a great reputation globally. He says, I hate those Canadians. The worst thing they're going to say is they're too nice. It's not a bad reputation.
Yeah. Absolutely. Well, Avi, I'm going to wrap it up here. There's so much more interesting topics we can cover, but really I wanted to cover some of the great conversation that we had a few months ago. We didn't get a chance to record. It was such a fascinating conversation. I was like, why don't we replay this conversation, dive a little deeper on some of these areas, and share it with the rest of the world. I know you're all about, I think one thing you told me is you're all about driving value. Everything you do you want to make sure it drives values. Thanks very much for coming on and offering so much value to the audience.
Pleasure.
And there's so many topics that we cover, so hopefully we'll have you on another time in the future.
Look forward to it.
Awesome. Thanks, Avi.
Thanks.
Cheers.